Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, to have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. Coming up, Rachel Oliver teaches us how money can make us money, investing in rent to own to grow your capital.
Because when you're starting with real estate, there's so many different ways you can go, so many different angles. How do you know which one's going to be the right one for you? So we teach people to understand what their why is, because when you know what your why is, you're going to overcome any hurdle.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back. Remember, whenever you're offered any type of investment opportunity, always ask 4 questions. 1, what's the return on investment? 2, when do I get that return along with the money I put in? 3, what is the amount needed? And 4, what is the risk? The worst case scenario. Rachel Oliver's on the show. So grateful that she's here. She's teaching us how we can make money in rent to owns, but by growing our capital in rent to owns. So I want to learn about that, but before I do, more importantly, how's Rachel been? How has Mr. No been, Neil? You know, when one of the shows that we did, what I loved about Neil was that he was helping people, you know, repair their credit. And I love that humanistic part of your business. Touch on that. What have you been up to? What's good for Rachel?
So we are still focused on elevating the education around how rent-to-own works, how it benefits home buyers who are struggling in today's market to get their foot in the door, to lock in some equity and essentially move into a brighter, richer future using the rent-to-own path. Rent-to-own is highly misunderstood, and one of the ways we lead and change this is by educating people, by showing them how rent-to-owns can be done, where the pitfalls are. We wrote a book on it. Yeah. The Rent-to-Own Essential Guide for Home Buyers. And I'll tell you, that book has seen a lot of traction, not just amongst the home buyers, but believe it or not, real estate agents and mortgage agents are actually jumping on the bandwagon to educate themselves about how rent-to-own works.
And investors.
Absolutely.
And investors.
That's true.
I did a couple of rent-to-owns, but there's, you kind of go with it or make it up as you go, and here's a napkin, and how do you want to make this work? And so I'm glad that somebody who has a very high successful tenant buying the home rate wrote a book on it, teaching it, even basics. What's the difference between rent to own and lease to own? Is there any difference? That's a question I have.
It's just terminology.
It's just terminology. So you are continuing to do this. You had your own little, kind of mini series, and I'm not sure if you're still doing that, but it was called MORE. Talk a little bit about MORE.
MORE is an acronym for Mothers of Real Estate.
Mothers of Real Estate.
And it's a project that I ventured into with 2 of my wonderful colleagues, Jillian Irving and Monica Jazik. They're both mothers, and they're both very successful real estate investors. And we each kind of have our own little niche. Jillian is a student rentals expert. I believe she's been on your show.
Yes.
Monica is into buy, rent, holds, so kind of long-term wealth building strategy. And of course, I do rent-owns. So collectively, we have all this wonderful, vast experience of different ways you can make money in real estate. So we came together and we formed a fundamentals training program that's available online. And we teach people to start with their why. Because one of the #1 reasons...
Start with their why.
Yeah.
Explain it.
Well, because when you're starting with real estate, there's so many different ways you can go, so many different angles. How do you know which one's going to be the right one for you? So we teach people to understand what their why is, because when you know what your why is, you're going to overcome any hurdle, any challenge, and any unknown. Because, let's face it, real estate investing has hurdles.
Yeah.
And there's a lot of unpredictable maneuvers, and sometimes it's risky.
Yeah.
So how are you going to stay the course if you're not true to why you're doing this?
No, but it's really good. And my first investment property was with Qatar Core Tour Mama, single mom. And I was 16 years old, and of course I have no money, but hey mom, because I was, went to a co-op, a brokerage, and so my heart really goes out to not heart goes out, but I love what you've done for the demographic of mothers. I really love that, and I just think you guys are smarter. I mean, you guys, and smarter, and this is what I mean by smarter than men in this, because you do more due diligence. You dot I's, you cross T's. I'm trying to get you to round numbers with me, and you're saying, no, Rav, this is the exact number. This is the, in this case study here that we're going to look at after the break, it's just so funny that the money in equaled, the money out, but I love that aspect. So you have a little online course. People can see that. That's fantastic. You said something. People need to know their why. The premise of this show is the why is to be able to, spend time with family and friends and have meaning and purpose, which I know you agree with. So how do you match the investor profile to the why? Today we're going to talk about how to grow capital. So that's one way to accomplish the why. What would be some other profiles that somebody may want? They may not want to grow capital. What else would they may want in the investment game?
Well, in the context of rent to owns, kind of going back to my sweet spot, there are some people who really want to invest in real estate to supplement their lifestyle. So they really need juicy cash flow. That was my situation 10 years ago when I wanted to leave the corporate world, when I wanted Neil to leave his corporate world. And we really needed that juicy, predictable cash flow. So I wasn't about kind of the back end growth of my capital. I wanted the front end growth.
Want money now.
Exactly.
Yeah.
But with that comes a certain, taxable component. And I was willing to take, my chances. Now that I've been doing this for a long time, I've shifted my focus. I actually prefer a back end heavy deal where there's a bigger capital gain on the back end, so it's more tax favorable than on the front end. I don't need as much cash flow. I have a big portfolio. I have a lot of cash coming in, and we're able to sustain our
we're
income level.
Yeah, we're not accountants, but you're saying it could be income tax if we're heavy on the cash flow, capital gain at the end of a deal on the growing the capital, and so you've got to figure out. What do you want? Do you want cash flow? Do you want capital gain? Now, in this, as an investor, we can even add to that. This is on either one passive for the investor.
Bingo. That's the one common thread. It's passive whether you want the front end heavy cash flow or you want the back end capital gain. Regardless, you're making that money passively.
Yes.
You can be absent. You can be doing whatever you want to do. You can go on vacations. You don't have to manage this. The money's just coming in every month.
For example, one of the shows we did, there was a fellow that in 1 year did a few properties, and his cash flow was $5,000-$6,000 a month. I mean, he's making $60,000, $65,000, $70,000 a year doing that, but that's now his income.
Absolutely. Well, it's part of income replacement for his wife.
For his wife, yes.
He wanted his wife to leave her job, but he didn't want to be totally out of pocket on her job income. So he replaced a portion of her income through these rent-owns, 7 of them, which leads to about $60,000 in passive cash flow each year.
And he did that in 1 year.
In 1 year.
Yes. And no, that's just mind-boggling. Okay, let's take a break here in a second. Before I do that, I want to know what's going on with your family. Neil, the girls, what are you doing? Are you teaching them this kind of stuff? Are they interested? How old are they now?
So we have a 13-year-old and an 8-year-old.
Yeah.
And the 13-year-old came home the other day saying that they're learning about interest rates and the cost of borrowing. It was music to my ears. Because
13.
I was able to actually show her a real scenario of what mommy and daddy do and how these interest rates apply to our cost of borrowing and how they influence our profitability. And she was actually like, wow, she was actually getting it and saying, I didn't realize all this schoolwork actually has a place in the real world.
Yes. Isn't that amazing?
I love it.
Isn't that great? that, hey, school is important because it matters later.
Absolutely.
Yes, no, that's fantastic. Okay, we're talking to my friend Rachel. We're learning how to grow our capital via rent-to-owns. Don't go anywhere. Everyday Investor continues in a moment.
Everyday Investor is brought to you by ProFunds Mortgages, fixed returns, real security. Sam McDaddy Real Estate, full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rav. Welcome back to Everyday Investor. We're talking to my friend Rachel. We're learning how money can make you money investing in rent-to-owns. But in this segment, you can grow your capital.
Absolutely.
You can grow your money. Okay, so as an investor, in what scenario would I want cash? In what scenario would I want to grow my capital?
So if you want high cash flow, you are usually looking to supplement your lifestyle. So potentially you're on maternity leave, your income's gone down a little bit, and you want that extra cash flow. Or you're going back to work and you have daycare expenses, you want that extra cash flow. Or you want to leave your job altogether. You want the cash flow.
So you want to go to school.
You want to go to school,
again.
Exactly. Or you maybe have children who want to live off campus at university. Well, maybe you didn't budget for that as part of the educational expenses that you've been saving up over the years. Well, you know what? You can do a rent-to-own and generate cash flow to cover their off-campus living expenses. So those are all kind of lifestyle choices. The other scenario is for somebody who is a professional. So take, an accountant, a lawyer, a doctor. They don't necessarily need the cash flow, but they want to be smart about how they grow their money.
Yes.
So they would go into a rent-to-own that has a higher capital gain component and a lower cash flow component.
They're not going to quit their day job.
Absolutely.
They're keeping their day job, but they want to be prudent and wise, and they want to grow their money. And so because they're not quitting their day job, they can take less on the cash flow and more on the back end.
Now, having said that, when we talk less, on this particular example that we're going to be talking about, this is a Georgetown, Ontario townhouse.
Yes.
And the cash flow in this scenario is $547 a month.
Yes, they're making $6,000, $7,000 a year when I say little. But they could be making more on the cash flow if they desire, but they desire at the end of this term, which is anywhere from 2 years, 3 years, at the end, they get to benefit from growing their capital and then get into the capital gain space.
Exactly. And when we're talking about capital gains, a portion of your profits with a rent-owned property comes from the cash flow, and the other portion, of course, comes from when you sell that property to a tenant buyer. So that's what we call the capital gain component. And, it can be in some cases, a 40-60 split, or sometimes it could be, 70-30 split. So depending on what your why is, depending on what motivates you.
Sorry, when you said split, you mean between growing the capital and the cash flow?
Exactly,
yes.
Exactly. So depending on what your why is and what your objective is, that's how we would then match make an investor with the type of rent-to-own property that would make sense for their objectives.
Yes. Okay, we're going to look at some numbers in just a second. So that's from the investor standpoint. I choose, but no matter what, it's passive. There's it's good to put on deodorant, but there's no perspiration involved whatsoever.
Exactly, and I perspire when there's tenants and toilets.
Yes.
And that's why I'm rent-to-own all day long.
Yes, okay. Let's just segue here a little bit to the tenant. Mm-hmm. And because there's a lot of people that are renting, and if they want to be renting for different purposes, there's multimillionaires that rent in Manhattan and have real estate other places just because they want to, and they don't have to stay there forever, and there's many reasons. But there's a lot of people who are renting that don't want to rent. What advice does Rachel give to them? They have money, some, or they could be gifted from parents, but the credit is not so good, and talk a little bit about them. Give them a little bit of hope that you don't have to rent forever.
Well, I think people go through different life stages, and depending where they are, maybe they're empty nesters, maybe they are rebounding from a divorce, and they're a new blended family, and they want to make a fresh start. Depending on where they are in their life, at some point a light bulb might go off and say, oh my gosh, we're spending $2,000 a month on rent, and that rent rate is going to keep going up and up and up as demand for rentals is going to increase. So when you do the math, $2,000 a year or a month adds up to quite a lot of money.
Yes.
And if you factor in over 3 years, people could be spending, $60,000 on rent. And at some point they realize, wow, I'm not getting ahead. I am not building equity. So they look at what can they do? And oftentimes they have a great income. They have the 5% that they've been working towards, home ownership, but their blemishes on their credit are still a little bit off. And maybe they don't have the closing costs ready to go, but they're eager to get their foot in the door. So they decide, okay, I'm gonna go the rent-to-own way. And the rent-to-own process allows them to take their 5%, lock in some equity, and every month continue to add up to build up that equity and create stability.
Yeah.
Create that sense of, this is mine, this is my home. No landlord is going to come a knocking to say, you got to move.
There's a pride of ownership there.
Huge.
In spirit, they own it. Legally, Rav owns it, but it's a win-win. I want them to have, and that's kind of where, yes, it's a for-profit business, as I've mentioned before, but there's a not benevolent, but there's a feel-good aspect from the investor point of view.
Absolutely. Neil has done a great job in structuring the rent-to-own in such a way that gives these home buyers a really solid path to success through the rent-to-own process.
Yes.
And doing what we have been doing, rinse and repeat, we've actually helped nearly 300 families across Ontario.
Fantastic.
And it is an incredible
300
feeling.
families have home ownership.
Exactly.
Yeah.
That otherwise they wouldn't have been able to
I
get
have people
into.
ask me all the time, Rav, where do I start? And I say, well, to build up your equity, to start, it's great to have, be in a home. Don't refinance to pay silly, debts and so on and so forth. Try not to do that. If you want to refinance for other investment purposes, that's different. But get into home ownership. It's the first way to do that. Well, I can't, my credit. Well, you can, because there's a rent-to-own strategy, which is the same as lease-to-own, Rachel. Did I tell you that?
Absolutely, yes.
Okay, we're going to get in the numbers, I promise. Where are we doing this, location-wise? So we're going to look at this one. You said Georgetown.
Yes, this particular sample is in Georgetown.
But where are we doing most of these?
All over Ontario.
All over.
And we concentrate on the top 10 investment towns. And what do I mean by that? These are towns that have strong economic growth. So they have transportation systems in place, they have a thriving microeconomy, they have a lot of development, so a lot of first-time home buyers are attracted to the area, which is, of course, boosting values in that area.
Immigration. People are moving from other parts of Canada to these cities.
Exactly. Affordability is very strong. Like Ottawa, for example, huge opportunity. You can actually still get into a rent-own investment property in Ottawa for less than $50,000.
What do you mean?
The property values in Ottawa are still so affordable.
You mean that's the down payment, closing cost, the $50,000?
Exactly.
Is that right?
So investors who are thinking, oh, I need to have lots of capital in order to get involved in a rent-own investment property, absolutely not.
That's amazing.
If you have as little as $47,000, we just did a rent-own in Ottawa, and it was a $47,000 investment all in.
Fantastic. Let's go through this particular case study here. So we purchased this property in Georgetown. How much was that?
So the purchase price is $415,000.
$415,000, okay.
And remember, this is an example of one of those deals where it's back-end heavy.
Rav is going to do this for somebody. The purchase price was $415,000. Rav's objective is to make a lot of money on the back end.
Exactly. So what triggers that opportunity is the tenant buyer having a very strong initial down payment.
Okay.
So they're not coming in with first and last month's rent. Remember, they are aspiring homeowners. So they've been saving. So in this particular scenario, the home buyers had $35,000 saved up.
$35,000.
And they're putting that into the deal at the beginning.
Okay, so my down payment, my closing costs, minus their $35,000. Okay, what number did that spit out?
So exactly, once you factor in all of your expenses, plus the fact that you get their $35,000 in your pocket when you take title, you're in for $67,000.
In this case, the investor was in for $67,000. And this is a 2-year term, 3-year, 4-year, what is this?
3-year.
3-year term, okay? So I'm going to enjoy that growth of capital in 3 years.
Exactly.
But I'm still getting some cash flow along the way.
So remember, you're getting $500.
Oh, you said that already, yes.
You're getting $547 a month in cash flow. So over 3 years, that'll be about $20,000.
$20,000 over the 3 years, I'm enjoying that cash flow.
Correct.
Okay.
And
And that's not the part that we were focused on.
That's not the part.
Yes.
The part that we really care about in this scenario is what happens when that tenant buyer is mortgage ready and is exercising their option to purchase.
Yes.
So fast forward 3 years.
Tell me how much.
They're buying this property for $480,000.
Yeah, they're buying for $480,000. I bought for $415,000.
That's right.
We're transferring title over.
That's right. There's been mortgage pay down. There's an appreciative component to it. So, and there's also a down payment credit that has to go back to those tenant buyers. So once you factor in all those minuses, you are actually clearing $47,000 on the back end.
47, and we rounded this a couple pennies here and there. Thank you for letting me, but it really was like pennies, you know, a few dollars. I man RAV for 67,000, and at the end, with the cash flow component and the big growth, it's $67,000 I made. So I made 100% on my money in 3 years.
Exactly.
So annualized return is 33%, 33.3% is what I made on this.
Basically.
Annualized, doing nothing.
Exactly. You've doubled your money in 3 years, helping another family become an owner.
And this is typical?
Yes.
This is what we're doing, right?
I wouldn't kid you. I wouldn't bring on an atypical deal.
Yes.
We have to talk about what's working, what's common, and this is one of those scenarios.
Yeah, no. I love it. And how many people have we helped so far?
Nearly 300
300 people. And how long?
in 10 years.
Yeah, that must feel great. And do you keep in touch with these tenants now, homeowners?
Yes, actually, many of them are so grateful and delighted to have had this opportunity. So they reach out, they invite us for coffee, they invite us for barbecues. It's a really wonderful experience to be part of their journey into home ownership. So we definitely stay in touch and we welcome that connection with them.
Yeah, no, that's amazing. Our time is over. I've learned, again, so much from you. Thank you, Rachel, for being on the show.
Thank you for having me.
Yes, and thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an Everyday Investor Insider, where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.